Karl Marx and Friedrich Engels' Communist Manifesto laid out 10 planks that serve as a blueprint for transitioning from capitalism to communism. The fifth plank specifically calls for centralization of credit in the hands of the state. This video explores how the Federal Reserve System in the United States satisfies the conditions of Plank 5 and discusses the importance of central banking in establishing a socialist state. Understanding Plank 5, Centralization of Credit. Plank 5 of the Communist Manifesto reads, centralization of credit in the hands of the state, by means of a national bank with state capital, and an exclusive monopoly. This plank suggests that centralization of credit, facilitated by a state-controlled national bank with a monopoly on financial power, is a necessary step towards achieving the socialist ideal. The Federal Reserve and Plank 5. Centralization of credit. The Federal Reserve, established in 1913, centralizes credit in the hands of the state. It holds the exclusive authority to control the nation's money supply, set interest rates, and regulate the banking system. This concentration of financial power aligns with the centralization of credit advocated in Plank 5. National bank with state capital. While the Federal Reserve is not a traditional national bank with state capital, it is a quasi-public institution with a unique structure. It is governed by a board of directors appointed by the President and confirmed by the Senate. Its shares are held by member banks, and it operates with a public mandate to promote economic stability. In this sense, it fulfills the role of a national bank with state influence. Exclusive monopoly. The Federal Reserve holds a de facto monopoly on monetary policy in the United States. Its actions significantly impact the nation's economic stability, and no other entity possesses the authority to issue currency or control the money supply. This exclusive role parallels the concept of an exclusive monopoly envisioned in Plank 5. The importance of central banking in a socialist state. Central banking plays a vital role in a socialist state for several reasons. Control over the money supply. A central bank allows the state to control the money supply, enabling it to finance public projects, redistribute wealth, and implement economic policies that align with socialist goals. Regulation of financial institutions. Central banks regulate the banking sector, ensuring that financial institutions operate in line with government objectives, such as promoting economic equality and stability. Economic planning. Central banks facilitate economic planning by influencing interest rates, credit availability, and currency circulation, all of which are essential tools in the pursuit of socialist economic objectives. Counter-cyclical policies. Central banks can implement counter-cyclical policies to mitigate economic downturns, which is crucial in a socialist system where the government plays a significant role in the economy. While the Federal Reserve System in the United States is not explicitly socialist, it satisfies the conditions of Plank 5 of the Communist Manifesto by centralizing credit in the hands of the state, albeit with a unique structure. Central banking is vital in the context of a socialist state, as it enables the government to control the money supply, regulate financial institutions, plan the economy, and implement policies that align with socialist principles. Understanding the role of central banking in a socialist system is essential for comprehending the intersection of economic theory and real-world financial institutions.